Welcome back. This is the Property Source and Success Show, and I am your host, Danielle Bell. If you've been following me for a while now, if you've been following the podcast, you will know that this is no fluff, no frills, just straight tactics and things that work to build a very, very profitable property sourcing business. Look, here's the truth, and I want to dive straight into it today. Most property sourcers stall in their business because they've actually never chosen their lane, excuse my French. They're chasing their monthly cash flow, or are they chasing property deals that are bringing longer term capital growth? If you pick the wrong one, you will waste months on the wrong streets, you will waste months on the wrong agents, and you will waste months with the wrong investors and the wrong deals. So what I wanted to do in today's podcast episode, and to be very clear, this is going to be a really tactical podcast episode. This is likely one that you will listen to or watch more than once. You will probably listen to this today, sit down maybe next week with a pen and paper and go through this in greater detail. It is highly tactical and strategic. But what I really want to do today is lock in the right lane for you, lock in the right area, and create a simple, what I call in my business, a buy box or a hunting brief, which is essentially everything that you're looking for within the realms of a property investment deal so that you can move forward with clarity. I'd like to get it done, and I'd like to get it done today. By the end of today's episode, you're going to know three things specifically. You're going to know whether you are sourcing for cash flow or sourcing for growth as per your location. You're going to know how to spot an area that matches either of those two strategies. And thirdly, you're going to know how to build what I call a buy box that agents actually take seriously. And if you know anything about agents, is that sometimes it can be very hard to get them to take a property sourcing client or agent seriously. Let's clear the jargon. I've mentioned cash flow, I've mentioned capital growth, I've mentioned buy box, I've mentioned hunting brief. What is all that, Danielle? Let me clear it up. Cash flow, very simple. Rent comes in, bills go out, your mortgage, management, maintenance, insurance, and then you've got money left each month. This is perfect if you want an income now and a bit of a safety buffer. So you will be dealing with lots of investors who are solely focused on cash flow. And by cash flow, we mean the money that that investor has left in their bank each month after their rent has come in on the property and they have paid the expenses associated with it, mortgage, maintenance, management. Then the second thing that we've mentioned is capital growth, which is essentially where you're buying for the future value. Usually the monthly profit on those types of deals is slightly thinner, and in many cases a lot thinner. But the real win is the equity. The real win is the easier refinance further down the line, or the resale further down the line, because there is more of a buffer there in terms of the capital growth and the capital appreciation and the added value over time. In terms of quick pros and cons, cash flow means income and stability. But in many instances, it can mean slower appreciation of the asset itself. Then you've got capital growth, which essentially means wealth building, but often it does mean tighter cash flow on a month-to-month basis. But here's the key. This is important. Here's the key. Listen to me. Pick the lane that matches your investor's goal, not your mood on any given week. I have lost count of the number of people that I have spoken to throughout the years, months and weeks who flip-flop between these two strategies. You need to pick the strategy that matches your investor's goal, but you also need to pick the strategy that aligns itself and affords itself in your area. Okay? So ask yourself this question right now. Am I sourcing for cash or am I sourcing for growth further down the line? You need to decide that, and then you need to lock it in. And once you've picked that strategy, or once you've picked that lane, your area either supports it or fights it. Cash flow areas have strong rents in correlation to the price. So I'll give you my own example. The areas that I tend to invest in are, I buy in anywhere between £90,000 to upwards of maybe £120,000. But the minimum rent that I will get on those properties for that is a minimum of £900 per month, with a maximum of probably £1,100 per month. That's a strong rent for the price. Cash flow areas also have very quick lettings, very low costs. They will have a solid tenant base, usually families, usually key workers, and more often than not, and this is certainly true of my own portfolio and the type of stock that we hold, they're mostly simple, two up, two down, or 3-bed houses in suburbs of the cities or smaller towns. Now, then we flip that on its head, and we've got capital growth areas. Capital growth areas have 2 or 3 key drivers. Number one is signs of improvement or regeneration, right? And that might be new stations put in place. That might be major employers moving into town. It will also have a very strong owner-occupier demand, meaning that most of the houses in that particular area are owned by the people who live in them, and they are not renting. They will typically have access to very good schools. They will typically have access to parks and green areas. They will typically have access to lots of social cafes and activities, so on. Again, I'll give you a really good example of that within my own portfolio. Not all that long ago, I purchased a HMO to hold in our portfolio in an area of capital growth. Did it hit all of these major improvements? Is there regeneration in the area? Yes, there absolutely is. In fact, there's a major multi-story car park being built a stone's throw up the road. Does it have mostly owner-occupier demand? Yes, the street in question is almost 90% owned by the people who physically live in the house. Does it have access to good schools? Yes. In fact, from the front door of the property that I bought, you can hit the local primary school with a stone. Not that I would try to hit the primary school with a stone, unless absolutely forced to. Does it have access to parks? Yes. Botanic Gardens, one of Belfast's most famous park areas, is a 10-minute walk away. Does it have access to cafes? Yes. Again, Belfast's Style Mile is literally 3 minutes walk from the property. Does it have limited supply and well-kept streets? Tick, tick, tick. So that is an area of capital growth, and that is why I purchased that property. I didn't buy it for cash flow because it's actually quite light month on month, but the capital growth year on year is very, very strong. So if you're not sure which type you've got in your area, run through those checks. There are 3 quick checks, and that'll give you a really good indication as to what you have access to. So for cash flow properties, for cash flow strategies, check the rent versus the sale prices. If the yield is thin, move the on. The second thing to check for is if it's a flat, ask about the fees. Service charges can wipe profit. And thirdly, ring the local letting agents and ask them very clearly, how quickly are 2 and 3 bed properties letting out right now? In my patch, they're letting out within a week, 2 weeks max. Ask the question. Then for capital growth, ask these 3 questions. Number 1, what are the recent sale times? Is there a buyer demand? How quick is the turnaround from the property going up for sale to being sale agreed? Search the area name and type in regeneration. Anything that's planned, upcoming, or previous will come up on that search. And then the final thing to do is ask an agent who's buying most. Is it first timers? Is it upsizers? Because if it's first times and upsizers, that is good news for you. And do all those checks before you commit yourself with a postcode in your area. The next thing that you want to do after that is you want to build what I call your buy box. Other people call it your hunting brief. Your buy box is safely a guardrail. Without it, agents really won't take you seriously. Very quickly, and I told you today's episode would be highly tactical and strategic. I want you to write down or make a mental note of these 5 things. 1, strategy needs to go on your hunting brief. 2, area and postcodes. 3, property type. Be specific. Is it 2 beds? Is it 3 beds? Is it flats? Is it not flats? HMOs. Then put your price range in and be realistic within a minimum to a maximum time frame. Then you have your outcome. I'm looking for properties that generate a minimum of £300 net cash flow, or I am looking for properties that on average appreciate a minimum of 4% per annum. And then also put in your deal breakers. Put in the top 3 things that will make you say no immediately. For example, the fees are too high, service charges, it's next to a bad street, or sales are slow in that area. Whatever matters most to you and your investor, put it in as a deal breaker. It makes it much easier for the agent to put the right types of deals in front of you. Then you get to turn it into action. Here is how you get to find deals that match your hunting brief. You will draw a map around those streets. Literally. You will sort by the newest listings first. You will scan the photos first. On first look, does it pass the eye test? Look for keywords. Look for landlord sale. Look for low fees. Look for near school. If you're focusing on capital growth, look for new development. Look for near stations. Shortlist 5 and call the agent, because at the end of the day, speed wins on all of this. That's what you can do online to begin with. Offline, you can do a street walk. You can do a street view check. You can ring a sales and letting agent. You can ask each for one street to target and one street that they would avoid. The why is where the gold is. And when I was first investing, I wish I had done that, because I ended up buying a property in a street where you would not send a dog to live. Okay, turned out that particular property that I bought, I thought I was getting it for a steal of a deal. It was just under £40,000, £39,999 to be exact, just £1 under the stamp duty threshold. Go figure. But as it turns out, yeah, it was very cheap for a good reason. It was a drug-run house, and the local paramilitaries were housing themselves in it. I wish that I had taken the advice, or just called local letting agents and asking them, where is the gold and where do I need to stay away from? I didn't do it, and it cost me a very expensive lesson. When you call the agents, the first thing you want to do is you want to sound clear, you want to sound credible to begin with. You don't want to come across as this that's just done a one-day crash course. You know, you need to be credible. I would say something along the lines of, hey Danielle, look, I am working with a partner at the moment and we're looking for a reliable income in North Belfast. Typically we're targeting houses that are 2 to 3 beds, anything from around £90,000 up to 120. Typically we want to avoid high costs. I'm not into big refurbs. Do you have any landlord sales or listings on your books that let fast? That's your cash flow script. Instead, if you're looking for properties with capital growth, you might want to say, hey Danielle, myself and a partner are buying for longer term value in South Belfast. We're looking at anything between £120,000 up to maybe £200,000. Ideally, I'm looking for streets with owner occupiers and visible improvement, houses that have got curb appeal, maybe local schools close by, maybe access to train stations, any regeneration. Do you have anything coming up that fits this spec? You have to be professional. You have to sound credible. If you're going to call them up and you're going to mutter and stutter over your words, it's not going to happen. Now, when you've got something that fits, don't dump links on the investors. You have to give them a one-page summary that answers one question. Why this deal and why right now? If it's for cash flow, show the monthly surplus. Show the rental evidence and how it can be managed very simply so that it's a total hands-free investment for the investor. If it's a capital growth style deal, show what's improving, show the buyer demand, show the exit routes, and always, always, always add what could go wrong and how you will handle it. That builds trust. Everything is not all roses. It's not all glittery and unicorns and sunshine. Sometimes things go up and people respect you more if you can say, hey, this is a possible scenario. It's highly unlikely, but I've thought about it and here's how we can navigate it. Really important. I told you today's episode, guys, would be fast-paced. I also told you it will be highly tactical. And that's exactly what I want for the Property Source and Success Show. I could sit here and talk about fairies and mindset. And while the mindset's definitely important, I'm not entirely sure how important the fairies are to your success in property. But I could sit here and give you fluff. I could sit here and give you chaff. I don't want to do that. Everything that we do with the Property Source and Success podcast is generated and geared around giving you as much value and tactics and strategy that you can take today, implement tomorrow, and collect money at the other side of it. So it is time to make it real. Say it out loud. My next deal is for cash flow. My next deal is for capital growth. Then you name your area and you name your streets and your postcodes. Focus on that for the next 30 days. Stop scrolling portals for fun. No more, I'll just take a look and see what's out there. Laser focus, guys, beats a lazy effort every single freaking time. So pick the lane that matches your investor. Pick the lane that lends itself to your investment area, your gold mine area, and get going. Work. As always, guys, if this episode helped you, if it was useful in any way, please share it with a friend. Please take a screenshot and tag me on social media. You can connect with me on Instagram. I am Danielle Bell Property, on Facebook and on LinkedIn. I hope this has been helpful and I will see you guys next week, same time.